These 5 money moves could save you thousands in 2026. Here's what actually works. I'm cutting through the noise and giving you a clear, fast-paced countdown you can act on this week. No hype, just practical steps that protect your cash. And amplify growth with simple changes you can automate tonight. Start 2026 with a safety net. I can't overstate how game-changing it is to have 6 to 12 months of essential expenses parked in a liquid, high-yield savings account. When job loss, a medical bill, or a market shock hits, that fund stops panic decisions and prevents tapping investments at the worst time. Treat this fund like an untouchable priority, not a convenience. Break it into a dedicated account so you don't confuse it with vacation money or an impulse purchase. Make the math realistic. Calculate rent, utilities, groceries, insurance, minimum debt payments. Then multiply by 6 to 12. If building it feels impossible, start with micro goals. 1,000, then 3,000, then 3 months worth. Automate transfers and funnel windfalls, tax refunds, bonuses, side hustle wins, into the fund first. Momentum from small wins makes big targets achievable. Having this buffer also gives you optionality. Negotiate better job offers, take calculated risks, or hold investments through volatility. In short, the emergency fund is the foundation. Without it, other strategies become riskier and less effective. Automation is the single most underrated financial hack. I set rules that move my money before I see it. Pay bills, fund savings, invest, so discipline isn't a daily battle. When you automate, you eliminate human error, late fees, and the temptation to spend what you should be saving. Allocate percentages of each paycheck, 10 to 20% to retirement, a fixed amount to emergency savings until it's full, and a maintenance amount for bills. Use multiple accounts or sub-accounts to visualize goals. Automation enforces a plan and makes dollar-cost averaging with investments seamless. Set recurring payments for fixed bills and minimal reminders for variable ones. Use autopay for utilities and loans where safe, but monitor accounts monthly so you catch billing errors. Automation reduces stress. It also positions you to quickly act when opportunities arise, like market dips or limited-time offers. If you haven't automated yet, start small. Automate one transfer this week, 50 or 100, to a savings account, then scale. You'll be surprised how fast your financial behavior improves when systems handle the heavy lifting. Chapter 3. Investing doesn't need to be complicated to be effective. I focus on diversified low-cost ETFs and use dollar-cost averaging, regular automatic purchases, to smooth market timing risk. This removes the guesswork of when to buy and reduces the emotional roller coaster of short-term market moves. Low fees compound into real differences over decades. Choose broad market ETFs for core holdings instead of expensive active funds or single-stock bets. Diversification across asset classes, equities, bonds, maybe real assets, reduces the blow of any underperforming segment. Dollar-cost averaging forces consistency. Whether the market is up or down, you buy more shares when prices dip, and fewer when prices rise, dampening volatility and potentially improving long-term returns. Rebalance annually to maintain your target risk profile. Start with a small, automatic transfer into your brokerage or retirement account, and scale contributions as your cash flow improves. Over time, compounding interest and disciplined investing are what truly build wealth. Chapter 4. Taxes quietly erode returns, so tax optimization is a force multiplier for your portfolio. I maximize tax-advantaged accounts like 401ks, IRAs, and HSAs first. That's free money and tax sheltering that beats most investment gimmicks. No contribution limits. Employer matches. Treat matching as an immediate return. Roth versus traditional decisions matter. Roths give tax-free growth if you expect higher future rates. Traditional reduces taxable income now. Use both, if possible, to diversify future tax exposure. I review my projected tax bracket and retirement timing to choose the right mix. Tax loss harvesting is another practical tool, selling losing positions to offset gains and reduce taxable income. It's not for every account or every investor, but when used correctly it preserves more of your returns. Work with a tax pro if your portfolio or situation is complex. Year-round tax planning, making contributions, rebalancing with tax efficiency, harvesting losses thoughtfully, can add up to thousands saved annually. Small, consistent tax strategies increase your after-tax wealth over time. Chapter 5. Top priority: improve monthly cash flow by eliminating high-interest debt. Credit cards, payday loans, some private loans, these often carry rates that outpace realistic investment returns. Paying these down is a guaranteed return equal to the interest you avoid. Attack balances strategically. Snowball for behavioral wins. Avalanche for fastest interest savings. Choose the method that keeps you consistent. Negotiate lower rates. Call creditors. Shop refinancing options when it lowers total cost. Even a small rate cut frees cash for savings and investing. Cut unnecessary subscriptions. Renegotiate bills. Build side income if possible. Funnel freed up cash toward debt, then to investments once high-cost liabilities are gone. Kill high-interest debt and unlock flexibility. More savings. Better credit. Freedom to invest. Make this step non-negotiable. It amplifies every other money move on this list. Outro: you've just heard a fast, practical 5-step playbook to save thousands in 2026. Build an emergency fund, automate savings, diversify with low-cost ETFs and DCA, dollar cost averaging, optimize taxes, and eliminate high-interest debt. Do these in order, or prioritize what's most urgent for your situation, but stack them over time for compounding impact. Want personalized help with your finances? Email us at info@frontlineconsultingllc.com or visit Frontline Consulting LLC for expert consulting. This is for educational purposes only and is not financial advice. Consult a professional for your situation. End disclaimer. Spoken and on screen. End visuals. Logo card, contact info, smooth outro music fade. Thanks for watching. Implement one move this week and you'll already be ahead.